I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, what is it, $1 million per coin by 2030. That still feels good to you.
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real, to see the survivors, first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think, though, the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop. Because they'll understand.
As we can see right there, Cathie Wood has high hopes for Bitcoin and Ethereum over the next decade. And she's also urging institutes to step back and say, do we actually understand BTC? And as you can see right here, Jamie Dimon, the CEO of JP Morgan Chase, obviously does not understand Bitcoin. He says, how do you know it's going to stop at 21 million coins? Jamie Dimon does not understand Bitcoin. These institutions are still learning about it. This shows we are still very early, and more adoption will be coming over the next decade. And we can see some of the innovators such as Tesla in the traditional space are holding Bitcoin on their balance sheet. They have over $180 million worth of BTC on their balance sheet. They are going to continue to hold Bitcoin, and I think they'll also expand their holdings of some other digital assets as time goes on. And we've seen other companies such as MicroStrategy, such as Square, hold Bitcoin on their balance sheet. And I think we'll see the institutional adoption come even greater over the next decade. We also have had Apple CEO Tim Cook come on and say he owns some Bitcoin and Ethereum. So could we potentially see Apple put Bitcoin on the balance sheet over the next couple of years? It's definitely a possibility. Let's go ahead and check out some more of what Cathie thinks about what's coming next for Bitcoin and Ethereum.
Money growth, as measured by M2, is down to 1.2%, a little lower than we expected for October. And by the end of this year, it should be negative. Now, that is from a peak in 2020 of 27%. Clearly, that was excessive. We were throwing everything we could, or the Fed was, at the coronavirus to prevent a depression. But we have now seen declining money supply really since March. And I had the pleasure and the honor of doing a podcast this week. I think it will come out the week of the 22nd with Jeremy Siegel. And Jeremy has very strong feelings about what the Fed is doing right now. Essentially that it's making a big mistake. Now, we've been saying that. Jeremy Siegel is a student of economic history. He actually taught at the University of Chicago with Milton Friedman for a number of years and got to know him very well. I think Jeremy thinks that Milton would be, as the saying goes, turning in his grave if he saw what was going on with monetary policy these days. Negative money growth is very serious. And in fact, we've never really seen a real bout with negative money growth since the Great Depression in the 1930s. So he's on high alert and again thinks the Fed is making a big mistake. And it's not just the Fed. I just saw this week Singapore's money growth on a year-over-year basis is down nearly 7%. And we heard the ECB, the European Central Bank, Lagarde, in the last few weeks talking about needs to play tough with inflation when Europe is clearly in a recession. So it's quite concerning.
So this is the M2 money supply chart that Cathie is referring to here. And you can see we've never had negative money growth since March, they have been taking money out of the economy. This is why Cathie believes deflation is coming. This is something we have not seen before. This is very, very concerning. So this is something we definitely have to pay attention to here over the next year.
So we just have to hope that when the Fed does pivot, and it will, that it will work. If it doesn't work, what will have happened is the equivalent of what happened to the Depression in the 1930s, and that was when the Fed finally did change its spots. It didn't work. It was called a liquidity trap. They pushed money out there, and it didn't take hold. There was just too much fear. I don't think we're going to get to that spot, but it is a risk, and we can't deny it.
So this is the S&P 500 back in the 1930s. You can see we peaked here back in 1929. I know this chart is a little hard to read here, guys, but we did fall around 79% on the S&P during the Great Recession. So is this something we're going to see again? Because this is the last time that we saw negative M2 money growth. So like Cathie just said, this is something we have to pay attention to. If the Fed does break something, we'll definitely see a bigger recession. We'll see the crypto market, Bitcoin, and the traditional markets all sell off.
Trying to figure out, is the Fed going to cause an accident and cause a recession from which it will be hard to extricate ourselves? We believe, if we had to take a position on that right now, we believe this recession is much more of a supply chain related inventory recession, and that it will clear up pretty quickly. Although, economic statistics are so lagged that come this time next year, we might still be arguing if we're still in recession. But we do think in that period, both inflation and interest rates are going to come down pretty dramatically. Inflation below 2%, and interest rates, I think, will be surprised. And one of the things we have been impressed by is how the Bitcoin blockchain and Ethereum, neither one of them skipped a beat in terms of operations. No transactions interrupted at all. If you think back, if you were in the markets in 2008, 2009, the markets froze. Banks stopped processing. They didn't know where the counterparty risk was, and the absence of information, the absence of transparency, the market froze and the Fed had to come in. It was a near-death experience for the global financial system. Well, it has not been a near-death experience for crypto. And it's highlighting how important transparency is. We can see every transaction on the network by IP address. We can follow the money by IP address. And the decentralization of the network is also paramount. It was very interesting that Sam Bankman-Fried never liked Bitcoin. Well, it's becoming obvious to me now that I know he never liked it, why he didn't like it. It's because it's not centralized. There's no way to control it. Like he was controlling his empire.
So basically, there are some indicators in the markets that we have to pay attention to, such as the M2 money supply growth going negative, what potential impact that could have on our economy. The last time we saw that was the Great Depression, and you guys saw what happened with that. And Cathie also talks about the Federal Reserve having to pivot because deflation will be coming very, very soon. So Cathie and her team believe that we will see a Federal Reserve pivot sooner than later, and that will cause the markets to bounce back. So we'll see Bitcoin and the rest of these crypto assets like Ethereum start to pump again. And you can see that she loved how strong Bitcoin and Ethereum were during this crypto downfall because the transparency was there. That's something you did not have in 2008, back when all of these private banks were going bankrupt. So she's still very bullish on crypto and Bitcoin over the next decade. Like you saw there, she said that Bitcoin will be going to $1 million by 2030. So let me know what you guys thought about all that in the comments section below. Thank you for watching all the way to the end. Hit that like button if you found any value in today's video. My name is Aaron from the Bitcoin Bros. I'm out. I'll see you guys in the next one. Have a great rest of your day.